Good morning, everyone, and welcome to the breakfast meeting brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. For today's session, our traders will give us a review of the equities and fixed income markets. Following that, our partners from IC Securities will also be giving us a recap of the Ghanaian capital markets, and then we'll conclude with headlines from across Africa brought to us by our media partners at Frontier Africa Reports. As usual, the meeting is being recorded and the audio file may be shared with third parties. We're also streaming live on our Vetiva online Facebook page if you prefer to view or join from that platform. The session is set to last for 30 minutes inclusive of Q&A. And if along the course of the meeting you have questions for our speakers, you can send them in using the chat function available on Zoom. If you're joining us from Facebook, you can make use of the comment section. However, if you prefer to speak, we'll be having a Q&A segment and you may use the raise hand function and you'll be given an opportunity to speak. We'll now start off with Simbiat from our Global Equities desk, and she'll be reviewing some market from across West Africa. Good morning, Simbiat.
Good morning, Victoria, and good morning to everyone. So like I mentioned, I'll be reviewing Friday's activity in the BRVM and the Nigerian equities market. And starting in BRVM, investors took profits in some mid-cap names, and consequently, the composite index closed down by 5 basis points, with losses recorded mostly in some consumer goods stocks, oil and gas, and financial services. We saw Sicrival, Total Senegal, and SIBC all closed down on Friday, with a 52% decline in turnover due to smaller volumes of shares traded. Year-to-date return for the market stands at 31.53%. And going into the first trade session of the week, we expect the market to start off positive, recovering from a negative close on Friday. In Nigeria, for last week's performance, the market started off bullish due to gains in the telecom space. However, we saw investors take profits in the broader markets, especially in banking and insurance space midweek, as both sectors lost significant points week on week. However, on Friday, we did see investors take advantage of the price dip as the banking and insurance sectors both gained 63 and 73 basis points respectively. So for stocks that pulled the index down on Friday, we had livestock and Onifla from consumer goods, MTN, Pema Bank, ICO, amongst others. Speaking to market activity, both volume and turnover improved significantly from previous lows, with FBN accounting for 41% of total traded volume. And also we saw a couple of cross trades in FBN at 12 Naira level, pushing the stock up by 4.35% to 12 Naira. So overall, the market traded mixed last week. However, in comparison with the prior week, turnover improved by 69% due to increased activity in some of the large to mid-cap names like MTN, Airtel, and flour mills, with overall sentiment still largely bearish. We anticipate this tepid sentiment to persist this week as we've seen little to no catalyst to spur activities in the market. And thank you, and that'll be all from the equities desk.
Thank you, Simbiat. We'll now call upon Johnson, and he'll be reviewing the Ghanaian equities market. Good morning, Johnson.
Hi, good morning, and welcome to another week. On the Ghana Stock Exchange, the bullish tilt to trading on the GSE persisted during last week's session, as market breadth favored advances by a ratio of 5-2. Bob maintained lead of the Ghanaian SPAC as it closed the week higher by 10%, following sustained local demand. This is followed by Total Ghana and CalBank, which recorded gains of 10% and 9.9% and 5% respectively. That notwithstanding, market significant growth was on the back of a 2.4% week-on-week gain in MTN Ghana. which rose to 1 cedi 30 pesos, the highest for this year. On the other hand, Access Bank and Unilever Ghana were the losers for last week's session, declining by 9.7 and 0.2% respectively. Consequently, the Ghana Stock Exchange Composite Index closed the week with a year-to-date return of 53.02%, up by 39.4 points. Market turnover was almost unchanged at 7 million Ghana cedis, with MTN still dominating the total traded value with 70.7% of all trades. For the week ahead, we tip retail demand to continue to chase limited offers in Enterprise Ghana, Total, and Bob, with a chance of markets moving up further. Thank you very much and enjoy the rest of the day.
Thank you, Johnson. Next up is Daniel, and he'll be reviewing the Ghanaian fixed income market. Good morning, Daniel.
Good morning to you, and good morning to all on this call. I'll first start off with the Treasury bill space. Government of Ghana exceeded its target at the regular Treasury bill auction on Friday for 91 and 182-day bills. It raised approximately 1.24 billion Ghana cedis, which was slightly above the target amount of 1.19 billion Ghana cedis. Yields for both 91 and 182-day bills rose by 1 basis point and 5 basis points to 12.10 and 12.35% respectively. We expect similar trend in the next Treasury bill auction this Friday. On the local currency bond market, the secondary market was subdued last week following a 2-year Treasury issuance, which cleared at 20%. Yields dropped slightly from the preceding week as 2025 maturities traded at 20.85% levels on Friday from 21% levels on Wednesday. The front end of the curve saw significant decline in yields last week. On the other hand, government seeks to raise a 5-year local USD bond this week. The initial pricing guidance is scheduled to be released on Tuesday, while book building opens at 9 a.m. on Thursday. We expect to see improved secondary market activity this week. And finally, in the Eurobond space, Ghana KEF continued its positive streak last week as it saw more buying interest on the back of global investor sentiment. The KEF is on its way to recovery as it traded upwards between +2 and +5 points. We tip the KEF to continue this trend this week. That is all for fixed income. Thank you very much.
Thank you very much, Daniel. We'll now call upon Omorige, and he'll give us a recap of the Nigerian fixed income and currency markets. Good morning, Omorige.
Good morning. Friday. Coming from the 307 billion.
Hi, Omorige. Seems we can't hear you.
Okay, give me a minute. Can you hear me now?
Yes, we can hear you now.
Okay, system liquidity improved significantly on Friday to open at about 461 billion positive from the 337 billion positive that was recorded on Thursday. In spite of the significant improvement in system liquidity, interbank rate tightened by an average of 13% on the back of increased funding pressure as FS retail auction and CRR debit hit the system on Friday. As a result, OBB and overnight rate closed at 14.5 and 15.25% respectively. For today, we expect interbank rate to trade at lower levels as funding pressure reduces. The parallel market closed at 545 naira to $1 on Friday, which is a 10 naira depreciation, while the earning window opened at 414.39 naira to $1. The highest trade that was recorded on Friday was 444 naira to $1, while the closing rate was 415.1 naira to $1. Brent and WTI both lost about 0.7% to open today at 81.59 and $80.21 per barrel respectively, amid fears of higher supply and weakening demand. The T-bills market closed last week on a bearish note, with bearish sentiment seen on the short to long dated maturities. We saw offers improve on the 27th January 2022, 31st March 2022, and the 10th November 2022 maturities from 3.3, 3.5, and 5.9% levels, respectively, to 3.7, 4%, and 6.05% levels intraday. Trades were majorly consummated on the long-dated maturities, and particularly on the 25th August 2022, 10th November 2022 papers, and the CBN Special NTB, that's the 29th November 2021 maturity. Overall, average benchmark rate rose by about 6 basis points to close at 5.02% levels. The OMO market continued to trade on a very active note to close last week, with interest in on the short and long dated maturities, especially on the 14th December 2021, 16th August 2022, and the 4th October 2022 maturities, while trades were majorly consummated on the long dated maturities. That's the 30th November 2021, the 4th October 2022, while average benchmark rate declined by about 32 basis points to close at 5.53% levels. The bonds market closed last week on a muted note as market participants decided to stay on the sidelines ahead of the monthly bond auction scheduled to hold on Wednesday this week. We witnessed slight interest along the short and long end of the benchmark curve, especially on the 2023, 2049, and the 2050 maturities, while trades were majorly consummated on the 2036 and the 2037 maturities. Overall, average benchmark rate remained unchanged to close at 11.86% levels. The Eurobond market closed last week on an active note with buy-side pressure seen across the sovereigns, while the corporate space closed flat. The sovereigns that enjoyed the most action on Friday were Nigerian 2025, 2027, 2028, 2037, 2038, 2047, 2049, and the 2051 Eurobonds. For our expectations today, we expect the bonds market to open this week on a muted note as market participants remain on the sidelines ahead of the bond auction scheduled for Wednesday, while we expect the T-bills market to trade in line with the level of system liquidity. That will be all for fixed income. Thank you.
Thank you very much, Omorige. We'll now call upon Justina, and she'll be giving us some headlines from across Africa. Good morning, Justina.
Good morning. Good morning, everyone. We'll be starting from the Southern African region. Today, the second Intra-Africa Trade Fair 2021 begins in Durban, South Africa. The one-week event is expected to attract about $40 billion of trade and investment deals by the end of this year. We have the former president, Olusegun Obasanjo, we have Cyril Ramaphosa, we have some key African countries will be attending the trade fair from today till the end of the week. Some key South African ministers have reached a broad agreement to sell some of the state power utilities coal-fired power plants to help reduce its debt burden. Also, Old Mutual says it has mandated its South African workers to get the COVID-19 vaccinations, and the policy is set to come into effect from January next year. In the East African region, we have the East African Business Council is pushing for the adoption of a 35% tariff rate for the private sector in Uganda and Tanzania. They are doing this apart from Kenya and Burundi and some of the other East African countries. And Rwanda says it expects its real GDP to get above 6% this year, and that's buoyed by vaccinations after a contraction of 3.4% in 2020. Tanzania's crops exports doubled to $83.5 million in September from $40.9 million in 2020. In the North African region, the European Bank for Reconstruction and Development is about to sign off on a $100 million green finance to Bank Misr. That's Bank Misr in Egypt. In a similar manner, the European Bank in Tunisia has reaffirmed its readiness to finance green renewable energy production projects and reduction of carbon emissions in Tunisia's industrial sector by 2050. Morocco says its budget deficit reached 51.2 billion dirhams at the end of October. In the West African region here, effective today, Ghana is removing 50% benchmark value policy on 32 item categories at the ports. Also, the Development Bank of Central African States is launching a bond loan of 100 billion CFA franc at an interest rate of 5.60% over 7 years in the financial markets. Benin is preparing to mobilize 220 billion CFA franc to boost its agri sector. Those are some of the stories we have across Africa. Thank you for listening.
Thank you very much, Justina. We have now come to the Q&A segment. If you have any questions for our speakers, you can send them in using the chat function available on Zoom. If you're joining us from Facebook, you can make use of the comment section. However, if you prefer to speak, you can utilize the raise hand function and you'll be given an opportunity to speak. I have a question for the Ghanaian equities desk. What's your outlook for the rest of the year in the equities market? And do you see any upside in any names till the year end?
Okay, so towards the end of the year, what we are expecting is that we are likely to see an increase in retail activities, particularly in MTN Ghana. And so we are likely to see some sell-offs as clients try to cash out ahead of the festive season. Also, to talk about upsides, there may be some upsides in Bob and Enterprise Ghana. There's a price target of about 4.9. I think stock is currently trading about 2.5-ish. And so there's still some room in there, although I must admit that there are limited offers in this name. Bob as well, there's a price target of about 7.38. Stock closed at 6.65 on Friday. But in all this, we are likely to see some sell-offs too. So I think it should be a good time to purchase shares in Ghana towards the end of the year.
Thank you very much, Johnson. We have time to take in more questions. You can send them in using the chat function available on Zoom. All right, in the absence of any other questions, we have now come to the end of today's session. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we thank you for joining us today. We hope that you have a great day ahead and a productive one too. Thank you and good morning.